End of the day with Ray. Hello, my friends. Well, ladies and gentlemen, we got $2 billion stuck in limbo. I'm thinking about these mega dealer roll-ups, and I know a lot of my friends are too. Folks, you listen to the marketplace, and they're talking about, hey, when the interest rates go down, then these folks will start buying each other up. I mean, we all thought for sure that Dex Imaging would have gobbled up a couple of these mega dealers by now. I mean, that's the reason they broke away from Staples, wasn't it? Hey, we want to get this thing up to $1 billion plus in revenue. We're going to go out on our own with Gamut, and we're going to go buy up some mega dealers. Of course, that hasn't happened. Everybody's in limbo. When you listen to what's going on in the marketplace, everybody's talking about these interest rates. Well, when the Fed gets together in September, they're going to lower the interest rates. Ladies and gentlemen, look, the interest rates have some things to do with this, but I don't think they can lower them enough to make these deals attractive if it's just based on interest rates. And the reason I say that is I went back in time, and I wanted to know what the interest rate was at the Fed level when Marco got together with Norwest Partners back in 2015. That was a long damn time ago. What was the interest rate when FlexPrint got together with Oval Partners, when Novatech got together with Trivest, when Visual Edge got together with Ares, when UBO got together with Centennial? What was the Fed rate when Dex Imaging was bought by Staples? What was the Fed rate when Dex Imaging got together with Gamut and left Staples? Ladies and gentlemen, we got $2 billion in limbo. I came up with that number by going to the ENX magazine, and this was in 2023. This is where they were profiling the dealers and how much the revenue is. It's right there. I don't think any of these people are lying. I will say this, Visual Edge IT wasn't in that issue. And at the end of the day, it's kind of irrelevant because we all know they're a financially non-performing entity within the net mega dealer roll-up. And we know that because we can look at the 10K and 10Q of their BDC lender, Ares Capital. I predict the revenue that's worth anything at Visual Edge IT is $120 million, and that would be their service revenue around print only. But at the end of the day, we got like $2 billion stuck in limbo. We got an industry thinking that the Fed's going to lower the rates to make this attractive for investors to go in there and gobble this stuff up. Ladies and gentlemen, let's go back in time. Do you realize that the Federal Open Market Committee, the last time they did anything with the rate was in July of 2023, July 26th of 2023, and they raised it by 25 basis points. And it's been sitting idle there since July of 2023. Some experts believe they're not even going to do anything in the September meeting. They're just going to let it sit there again. Ladies and gentlemen, folks out there thinking it's going to go down 100 basis points, I think that's pretty damn optimistic, and I don't think it's going to happen. I think you're going to see it go down maybe 25 basis points, 50 tops. But folks, let's go back in time. Let's face some reality about the Fed rate. When Marco got together with Norwest Equity Partners in 2015, the Fed rate was 0.25 to 0.50. When FlexPrint got together with Oval Partners in 2016, 0.5% to 0.75%. When Novatech got together with Trivest in 2017, 1% to 1.25%. When Visual Edge got together with Ares Capital, and that would be a really bad day for Ares Capital, it was 1% to 1.25%, and that was back in 2017. When UBO got together with Centennial in 2018, it was 1.50 to 1.75%. When UBO brought in a secondary lender, Churchill, in February of 2022, the rate was 0% to 0.25%. That was a good time, right? That's when the Fed was really getting aggressive. I mean, after all, we had a global pandemic coming out of it, a lot of things going on, right? But ladies and gentlemen, look at Dex Imaging. When Dex Imaging was bought by Staples, the Fed rate was 2.25% to 2.50%. When Dex Imaging broke away from Staples, got together with Gamut, it was 5.25% to 5.50% at the Fed level. Folks, if the Fed got together at their meeting in September and they said, we're going to lower it by 300 basis points, okay? It would still be higher than where all these deals were consummated. It's not about how much the Fed's going to lower the rate to make these deals attractive. It's got to be about something else. And ladies and gentlemen, I got to be honest with you. When you look at what the Fed rate is and when you look at what these deals are being put together, with the private equity folks and what the interest rates are being paid, it doesn't really have a whole lot to do with the Fed rate. I mean, let's just look at Visual Edge IT because we have access to all the 10Ks and 10Qs. I wanted to go back to the commencement. The first time I could find Visual Edge IT on Ares Capital's 10Q was at the end of September of 2017. Ladies and gentlemen, they were paying 5.75 adjusted quarterly percent over the LIBOR rate. Total rate was 7.08%. They had a payment in kind loan with a fair value of $37.6 million. They were paying 12.50% payment in kind. You see, the lenders, they also, well, they evaluate the risk, okay? Don't they? And obviously, at 12.5% back in 2017, that's a pretty damn steep number, right? Pretty steep. Strategy based on unrealistic optimism defined by inabilities to execute leads to traveling a fantasy road to failure. Ladies and gentlemen, you know, I have the chronological order of Ares Capital from the year that thing was put together with Visual Ed. And it is an absolute train wreck. You can just watch the train running right off the tracks. And so the question is, don't you believe that the investors out there are paying attention to this? Of course they are. They know each other. They're playing golf with each other. And this is a mess, to say the least. And folks, you know, I'll get into more details on this when I update the next quarterly 10Q from Ares Capital. You know, September will end another quarter. Sometime in October, we'll see that 10Q. But look at some of the interest rates they were paying. In 2017, payment in kind interest rate, 12.5%. In 2018, payment in kind interest rate on the senior subordinate loan was 12.5%. It gets crazy now. 2018, payment in kind on the senior subordinate loan, 15%. In 2020, ladies and gentlemen, 16%. Folks, at the end of the day, you really think it's about what the Fed interest rate is? Because it's not. It's about the risk. It's about the exit strategy. And this thing at Visual Edge has been nothing but a nightmare from 2017 on forward. When I shared their numbers for the last quarter, folks, since December of 2023, the fair value that Ares Capital recognizes on that Visual Edge loan, it dropped by $4.8 million. And that's the loan and their preferred position. Their preferred position at the end of December of 2023 was a fair value of $44.1 million. It's $39.2 at the end of the second quarter. I mean, this isn't good. Investors are looking at this. Interest rates, you know, the lower they are, the lower the cost of the money. That's a fact. Of course, lenders balance the risk against the rate. Investors are looking for strategy. What has changed in the strategy? How are we rolling out what we are rolling up? That's a big question for all these roll-ups to answer. What's changed? You know, I think about Marco getting together with Norwest Partner in 2015. The whole world's changed since 2015. Whatever those aspirations were in 2015, they're all changed. It's different. What are they today? Why is Marco still in the hands of Norwest Equity Partners? Why are they still there? Is it because they have this IT business inside the copier business and they couldn't figure out a way to sell it off? Why are they still there? Ladies and gentlemen, how are we rolling out what we're rolling up? I believe the only way this is going to work is that these mega dealers have to go on a cost-cutting frenzy. They have to go crazy with cost-cutting. Just like we're seeing our OEM friends do. They can't just continue to do what they were doing in 2019. All those deals that were put together as far back as 2015, everything's changed. And at the end of the day, these investors have to be thinking to themselves, what's the exit strategy? So if we go in there and we put a couple of these mega dealers together and we create this big, huge business, what's going to change? Can they cut enough cost to increase the EBITDA to give us a bigger payback? Is the strategy just to go ahead and put them all together, cut as much cost as we can, and live off the EBITDA? Well, there's nothing wrong with that. Nothing wrong with milking the cattle. There's no more milk. But at the end of the day, ladies and gentlemen, the mega dealers have to decide what they're going to do. Because all these mega dealer investors, they've got to be paying attention to what the hell's going on between Aries and Visual Edge. And they got to start realizing the fantasy about building some IT company inside a print company is basically a fantasy unless someone can prove they're doing it better some other way. And folks, inside the private equity, you can't invest the kind of money that you need to invest to build the right IT services company. And the ones that are successful with IT services, I think about my friends at Impact Network as an example, is because they're self-funding that. They can give up a lot of their EBITDA. They can invest back in the company. Well, ladies and gentlemen, when you're straddled with a massive amount of debt because you ran around and bought up a bunch of copier dealers, and your interest rate's 12%, when your interest rate is 6% above the Fed rate, that's a little bit tough to do, isn't it? A lot of things got to change because right now we got $2 billion plus in limbo. And everybody watching me knows this. Status quo is the killer of all that'll be invented. Don't get stuck in status quo, and I'll see you all tomorrow.